Hello everyone, today is Friday, August 14th, 2020. My name is Evan and welcome back to another market recap video. If you're new here, welcome. We break our videos into two parts. First part, we're going to go through everything that happened this week. So individual market performance, market internals, sectors, volatility, and pick apart everything that happened, everything that stands out and looks different. And in part two of this video, we're going to kind of put everything into context. We're going to look at some of those longer term trends and some of that specific price action over the past week, month of trading. So hopefully that sounds good. Let's dive right in. A couple of the headlines for this week. We had a good amount of movement this week, and really it was really kind of front loaded this week, where we had gold, silver, bonds all sort of rolling over at the beginning of this week. Throw in the Nasdaq in there. I mean, throw in stocks sort of generally. And basically we had kind of everything that has been working getting flipped on its head, upside down, and sort of heading in the other direction. We did stabilize about midway through the week. The Dow Jones came out as really the leader here, or a clear winner of rotation, which we're going to talk about. And there's some warning signs in the credit markets after this week's trading that we want to pay attention to. We'll talk about that in just a moment. So in terms of overall market performance this week, if we look here at the right-hand column, even though I sort of just spooked everyone with those three sort of headlines, we actually did manage to close green across the board after everything was said and done. Some of those weekly candles aren't the most pretty out there, just because there are some upside tails on a lot of those weekly bars. We'll look at that in the second half of this video. But I do think it's notable here, if we look at world stocks minus the US, we did see some outperformance overseas, 1.46% up on the week, while all of the US indices here, I actually don't include the Dow, which I should, is below, kind of 0.5% or less. If we go to market internals, we actually saw a recovery this week. Remember, last week stocks were basically down broadly across the board. So this was a bit of a recovery week in some respects for certain sectors. Market internals did bounce back this week. We got 400 new highs being made throughout the week. We had 1,600 stocks advancing on the week on a net basis. And you can see the percentage of stocks holding above their 20 SMA in the S&P 500, kind of hovering around the 3/4 mark, got as high as 80% on Wednesday, but we're still trading between around 70 to 80% of the stocks. Nice healthy number in the basically above a 1 month average. If we go to sector performance here, you can see industrials, energy, consumer discretionary. These are the top three winners from this week, and the bottom three winners were all in red. This is real estate, utilities, and communication services. So those were the only three sectors in the red this week. They were the worst performers. You can see the majority of the market did manage to eke out some positive gains. Now, if we look at volatility, really didn't change at all this week. Volatility term structure, basically from front month all the way out to 1 year, essentially stayed the same. The front month VIX is trading around 22, which is above its long-term historical average. Consider anything over 20 or anything over 18 to be on the higher side. But you can see after everything was said and done, we really didn't see too much new information being pulled from the VIX. Now, the credit markets are where things get interesting this week, because we did see, LQD and JNK. These are ETFs, but they're basically our proxy into what's going on with investment grade bonds and high yield bonds. And typically, they can sniff out some stress in the system or issues earlier than equity markets can. And this week was notable in the sense that we did see a strong sort of divergence, I would call it, between equity prices continuing to rally. We're seeing LQD and JNK both closing firmly in the red. So I think we want to pay attention here. We want to see if this is a potential canary in the coal mine here that is giving us some early indication. Now, along with this, we did have a spike in yields this week. So we saw one of the biggest jumps in yields. So putting some pressure, and these things all kind of work hand in hand. But we saw, right across the curve from the short end to the 5-year all the way out to 20 plus year, we basically saw yields jump up, strong upper teens and 20s to even 30% over this week. So we did get that. We got a retracement in gold and silver, 5-6%. These are big moves, and basically any other point in history we'd say, wow, these are some really outsized moves for gold and silver. But given the run that they've had, given the fact that they've posted, look at the 1 month return here for silver. It's up 37% still, even after this 6.5% slide. So the fact that they've gone up so much gives you that sort of vol expansion, so things can pull back in equally sort of as nasty of a move. And I think we saw that this week. Crude oil managed to hold pretty resilient and eke out some gains here to the positive side for WTI. So if we kind of put it all together and we look at the report card from this week, we had a mixed picture. I think generally here the market kind of gets a B in terms of its quality of rally. Vol environment still a bit concerning. Credit market was again showing some of those points of potential stress or warning signs, or kind of giving us a little early heads up there that we want to pay attention to. So all in all, equity markets still higher. Breadth was supportive. We did see risk sectors outperforming, so there was at least enough to offset it and to say that there's still, generally speaking, a decent amount of positive things that are still happening. So B was the rating. If we finish it up here with our Merlin strategy allocation, we saw a big change this week. So we really stepped in aggressively this week and bought the dip primarily and almost exclusively in technology. So Monday and Tuesday of this week, Merlin was very busy buying some of those tech stocks as they were selling off, and it really picked up a lot of exposure here. So you can see 51% allocation now to technology. This is the margin account, and so the margin account has, as its name implies, is willing to go on margin in terms of its allocation. Basically, you can see here that it's over 100% allocated right now. The equivalent portfolio for this would be like a non-IRA, or an IRA portfolio. It's kind of the way I like to think of it, or just a non-margin portfolio, and that would be, probably like 70 or 80% invested at this point. So this is definitely the more aggressive allocation scheme, but still I think goes to speak that we did see some opportunity this week in technology. We'll see how that plays out. It's too early to tell. Obviously, those buys on Monday and Tuesday have started to work out nicely so far, but we're going to need more, more conviction and more proof that this tech, that the tech names can actually hang in there and not see a much bigger retracement. So as always, if you want to learn more about our strategy, how it works, you can head to the URL down there, thetraderisk.com/Merlin. 14-day free trials also available. So that is it in part one. We'll be back in just a moment here with some charts. All right, we are back here. We've got some charts open. We're looking at our equity market grid. We have our smart trend filters applied to each of these charts. So this is the colored dots you see there, which indicate direction and strength of the trend. And price itself is the white dashed line that you see on all of these charts as well. So we're kicking things off here with a weekly time frame, and all of these markets here. So S&P in the top left, Nasdaq in the top right, IWM in the bottom left, and then the bottom right is ACWX, which is our world minus the United States ETF. And all of these indices here did close positive on the week, and our outlook for these markets have been bullish now for the past couple of months, in the S&P since late May, in the Nasdaq since early May, and then for international right at the start of June. So we've basically had bullish outlooks and bullish direction assigned to all of these markets, and so the fact that they rallied this week is certainly in line with that, and there's no change in our outlook. You can see a little bit of separation coming here in the IWM. Same thing with the S&P 500. So basically what you're seeing is some of that momentum kind of picking up here to the upside in both of these markets, frankly in all three of these markets in the bottom, in the bottom side here as well. So all of that basically staying the same in terms of trend outlook and direction. If we go down to a daily chart, everything pretty much the same here as well. So we have, essentially buy signals on all of these markets as well. The upper right here, so the Nasdaq 100, this was the most under pressure here, and particularly this week on Monday and Tuesday, or really I guess it was more like Tuesday and Wednesday of the NDX of the Nasdaq was where we got into a little bit of warning territory here. So we had a couple of yellow dots printed there, which basically says, there's some mixed signals, and there's some, there's just some cross currents going on. And that lasted only for 2 days before resolving back into the bullish side here, the green dots, the bullish outlook, and that's basically how it finished out the week. So that was really the only change we got here in terms of shorter term direction or anything in that regard. So essentially here from a trend perspective, weekly basis, daily basis, we've got bullish outlooks assigned still to all of the equity markets out there. So let's jump into the price action. We know what the trends are. Now let's look a little bit closer at some of the price action here. And in the S&P 500, you can see we basically got right up to its prior all-time highs. And it doesn't look like, if I'm not mistaken, I don't think we ended up even breaking above the prior all-time highs, even on an intraday basis. So I believe this is the level that we're looking at here, 33.93, I believe, is the prior all-time high. So that's what we want to keep an eye on. It got right up there. We almost tested it a couple of times, and you can see we basically closed out the week with nearly back-to-back inside days in the S&P 500, sitting right underneath prior all-time highs. So it'll be interesting to see coming into next week, is this going to be just some explosive move where we rocket past the old all-time high, and then we really see some froth, some chase, and some momentum? Or is this finally the spot where the market gets a little bit heavy, it's finally done a full round trip, and it's about to roll right back over and kind of come back down to earth here into the 3200s? So far, I guess if I had to be a betting person on this, I would say I would favor the direction of the trend and still give the benefit of the doubt to buyers right now. Even at this, even at the slower point here, as this is slowed down and consolidated. But we'll see. We'll see what happens next week. For now, the trend is still up, and buyers are in control, and the only level left on the upside is now right above us here, which is approximately, let's call it 0.5%, a little over 0.5% from where we closed on Friday. So that's what I'd be paying attention to. Let's see, you get this little micro range right here to pay attention to. So if you're a very, very short-term trader and you're looking for some expansion here out of these, again, they're not quite, I don't think, back-to-back inside days, but they're pretty darn close. If we start, breaking below 35.55 next week or over 33.90, that would be kind of that near-term breakout level to pay attention to. So that is currently how the S&P 500 is set up. If we look at the IWM here, so IWM, remember last week was up and leading strongly, up 6% last week. And if we look at the performance here this week, it was only up 0.59%. Also, take a look at the tail up here. So it was a much lower range, smaller range week. And also, we closed much closer to the lows. We certainly rejected off of those highs. So that weekly candle here isn't the most ideal. If we go down to a daily chart, though, you can see it looks a little, it looks relatively innocent on the daily chart, just given the fact that basically what's gone on here is we had the breakout of the June highs. So the June highs that were in right around 153. So the IWM broke above it. Got a couple of days of continuation, and now it's essentially going sideways to flat to just mildly down 4 days in a row, and it's working off this run-up that it's had for the past 2 weeks. So the price action here in the Russell looks, frankly, extremely constructive, just in the sense of really going sideways, working this off through time. The trend is bullish. So for me, the IWM looks pretty great here. Again, doesn't mean it has to resolve higher. Things can change. If we start off Monday with some gap down and we start taking out to the downside 153, then my analysis, my outlook is certainly going to change. But based on everything that I'm seeing here, this looks pretty darn constructive. If I go to the Qs, that's not the Qs. If I go to the Qs, this is where, certainly there was some concern with over the past week or so. It started to lag. Last week, we noticed the lag, and we noticed there was some rotation into the more beaten up areas. And basically, that sort of stayed the same this week. The Qs did play some catch up on, kind of Wednesday, Thursday, a little bit. But generally here, the Dow and some of the other components, like we looked at in part one, just outperformed technology on a general basis. But when we look here at the Qs, we got our first 3 days down since the recovery started. So basically this index here, the Qs, have not had 3 days down in a row. At least I'm pretty certain of this stat. Doing a quick eyeball, I think it is. Please just correct me if I'm wrong. But 3 days down in a row, this was the first time it happened basically in the past 4 months or so. And we essentially responded to that with an aggressive sort of buy day here on Wednesday. We gapped up and then basically expanded to the upside, took out the prior couple of days highs, and then we essentially went sideways here for the rest of the week. So the Qs did manage to, kind of break back above this range here. So if I were to, kind of clean this up, I would be drawing a level right around here as a good level. That's sort of a line in the sand. And obviously the lows was from Tuesday, I think are pretty relevant. So, this band, I would say, just this broad band right in here, if we're going to keep the Qs as a leadership kind of group, if we're going to keep that momentum acting very strong and healthy, then I would like to see us essentially holding over 265 over the next couple of weeks. Again, if we do start resolving below there, then as we talked about in our past videos, all the way down to around 250 or so. So basically the top end of June, lower end of this July range, 252 to the lower 250s seems like a reasonable spot. And again, we talked about the fact that just when we zoom out here, just look at how strong and this trend has just basically been pent up here to the upside. So even seeing a move and a broader sort of sideways consolidation with a retest at 252 would be perfectly healthy in the long-term sort of outlook for the Qs. So a couple of levels to pay attention to: upper level momentum around 265, more intermediate term healthy action around 252, and of course we're trading just off of its all-time highs here as of the close on Friday. So hopefully that gives you a good kind of hand-to-hand price action analysis of sort of what's going on. Let's jump back to our trend filters, take a look at what's gone on here. So top left, top right, this is our credit ETFs, LQD and JNK. You can see on the weekly chart, they're both still bullish trend on the weekly. On the daily chart though, so you can see investment corporate bonds here, LQD, did turn bearish trend for the first time since May. So we're going to want to keep an eye on this. This is definitely a change of character here. You can see JNK in the top right still managing to kind of maintain the yellow dots here, so we don't have a complete conversion into a bear trend, but it's something we're going to want to pay attention to in both of these markets in the weeks to come. If we look at VIX in the bottom left, still on a sell signal, and then TLT in the bottom right, this is notable as well, getting a sell signal here for the first time since early June was when we started to transition back up in TLT. So this here potentially something we want to pay attention to, of change of character, change of direction for TLT. I mean, quite frankly, this is, potentially, a good thing that we're finally seeing bonds roll over. So you have this scenario where if we actually do think markets are kind of back to their old ways, where not everything goes up at the same time at once, TLT breaking down while a S&P 500 is basically potentially ready to sort of springboard through all-time highs, those two things, that old correlation would start to make sense. So TLT selling off, S&P getting ready for a rally to the upside here. Not that it hasn't been rallying already. Again, just a scenario to keep in mind. Certainly doesn't have to play out that way. So we covered all of that. If we look here at metals next, GLD, weekly chart, you can see finally starting to come back to earth. Silver, basically the same thing. Again, these moves have been so parabolic that a 5% retracement, 6% retracement doesn't even get you back to our trend filters here. So our trend levels of indication, so to speak. So that goes to show you just how strong it's been. If we go down to a daily chart, you can see we're starting to transition here a little bit, neutral in GLD, and still, green here in SLV, despite this week's action. Oil, bottom left, is still on the bullish side. If we go to our sector grid, really no changes. I don't think no big notable changes to speak of here on the weekly chart. Actually, there is one, energy. And we'll talk about energy in just a little bit. So energy getting its first buy signal here since, so we had one little attempt at a buy signal back here. This was December of 2019. So this was the last time that energy stocks with our model here printed any signs of hope for the upside. And prior to that, it was basically April, May of 2019 for energy stocks. And so this is the first bullish print here in over a year, I would call it. I mean, if you want to X out this one here, but it's been a long time. So that's something that's notable. We're going to talk about that in just a moment. No real other changes to speak of there on the weekly. On the daily chart, not a whole lot of changes either. So let's go back to the price action. Let's go back to candlesticks here. Let's talk about energy. So energy, like we just mentioned here, going bullish on the weekly, which is something that, again, if we're looking at a weekly chart here, you can see we've had a very impressive drive off of the low. That came after a very impressive sell-off in the first quarter of the year. So we sold off 60%. We rallied about 100% off of those lows. We've now pulled back a little bit, gone sideways, and our trend model now is basically giving us that early indication here that this could be ready to continue higher, to make a potential, kind of second leg to the upside. So I think that's interesting. We'll see if it plays itself out. If we go down to a daily chart for energy, you can see it's just basically been pent up here, going sideways. It seems like, from a price action perspective, really around 39 to 40. This area up here, I think, would be your sort of your go signal, you're all clear if we can start to get back above this band. We'll see if it happens, but you're certainly getting some potential opportunity there. XLV, talked about this quite a bit. I like the potential here in XLV. We've been highlighting the potential in XLV. It's basically gone sideways after a much longer period of going sideways. So you get that small base on top of a bigger base. I always like those types of patterns in terms of defining risk. We'll see if it actually does resolve in the direction of the trend, which is to the upside. It could, be a topping pattern rollover, and that would be pretty nasty. But so far, we'll give the benefit of the doubt to the buyers, and we'll keep an eye on that one. No real signal just yet. XLI. I wanted to highlight this because this was basically the biggest beneficiary this week. This is where we saw rotation. Take a look at a couple of things. First, down here at the volume. So you saw expansion in volume here as this started to ratchet higher and break out. So you basically got essentially this is this has been up 8 out of the past 9 days or 9 out of the past 10 days in a row, and most of it on heavier volume. So that's really constructive there for XLI as it starts to break over the June highs and sets this stronger trend in motion. And basically IYT, which is something we don't actually look at too often here, is just the Dow Jones transportation average. Basically, you can see the same thing here. It's essentially been up 8, 9 out of the past 10 days. And again, making some good progress to the upside, strengthening that trend. MACD's at new highs, flagging out here at new highs. So both the XLI, IYT getting some love and certainly seeing some rotation this week. So that is it. That is what I got for everybody for the weekly recap. Lots of things happening this week. So hopefully guys are navigating it just fine. Be interested to know what you guys found interesting this week. Was there any standouts to you or anything that I missed? I'd love to hear them below. If you love to leave a comment, I'd like to read them. And I think that's it. So have a good weekend. Thanks as always for tuning in and watching. You can subscribe to our YouTube channel. Keeps you up to date with all of the latest. Have a great weekend, and we'll see you back here on Tuesday of next week.